Down, down. Good girl. Stay.
Hey Jamie, you're live and good to go.
Oh, is there people in here so far?
Yep, uh-huh.
Oh, sweet. All right. Sorry, I'm just sitting here just waiting. Cool.
Awesome, man.
All right. Hi, everybody. I hope everybody's doing well. Today, we're going to go over how to use creative financing methods to acquire land and a little bit of other kind of tips and tricks for this stuff. So far, I just want to let you kind of know who I am and what our journey has been so far. So my name is Jaymie. We're from Living the Off-Grid Dream. About 3 years ago, my brother and I decided we kind of wanted to go buy some land and live the simple life and get away from the crazy housing costs in the city. And just, it was during COVID. So we also just wanted, a bit of room to run when there was lockdowns going on and that kind of stuff. So we had no money. I had bankrupted my previous business through during COVID, which was unfortunate, but it led us here. So that's all good. But we knew of certain types of real estate acquisition strategies and investment strategies so that we'd be able to prove value to somebody to be able to acquire land and work with us on that. And that's what we did. So within 3 months, we went from being in a whole lot of debt. I was in about $40,000 worth of credit card debt specifically. And we went from that to owning land in 3 months. We bought 160 acres off grid with no zoning, meaning we can do whatever we want with it. We could put 1,000 tiny homes on it if we wanted. And I'll teach you how to find that on this call today, because the zoning can be a big thing sometimes. And yeah, then from there, we've been doing rentals on the property. We've been building out a regenerative farm. And right now, we have two tiny homes on the property. Mine is just about done. I'll show you some photos here in a minute. Zach, sorry, it says my screen sharing is disabled. So as soon as I'm able to do that, then I will show all of that stuff to everybody. Yeah, that's kind of where we're at and a bit of my background. I've worked in the construction industry growing up. I've also here, one sec. Emma, can you please stop that? Um, I worked in the construction background growing up, and then I've been running my own businesses for probably the last decade or so. So I will, yeah, I'll share a little bit. This is some photos from our property. So these are kind of older photos, but we bought 160 acres that has our own mountain. So on the right here, that's our mountain. That was our attempt at a big hot tub. So these are some of our glamping units. We rent these out. These tent structures you can see here. We host retreats. Shelby and I are both status Indian, so we have our elders come up and whatnot. Yeah, so that's a little bit about us. And then here's my tiny home. So these are photos of it just getting finished. It's with Sunshine Tiny Homes, and yeah, so that's just to show you that we're trying to live that life as well. But let's dive into the bread and butter of this. So here's some of the stuff that we're going to be going over. We're going to be going over zoning very quickly, just because I think it's very interesting and very needed for a lot of this stuff to make sure that you can actually put your tiny home on your land. And if you want to create a community and that kind of stuff, you need very specific zoning. Then we're going to go over 3 creative ways to raise funds to buy land, even if you're starting from nothing. And then we'll dive deeper into that. So, yeah, zoning. I want to share 2 things. One is, I'm not sure if somebody's covered this in the summit so far, but there are types of tiny homes that you can get approved. You can get a permit as a regular dwelling, because I know that there's a lot of certain types of land zoning that make you actually have a regular, like you have to build a regular residential home. And there are tiny homes that you can do that with. I know that Pam at Sunshine Tiny Home, where we bought ours, is working on that right now. So that does exist. If you do run into bylaws that's restrictive for you, we personally go for land with no zoning. No zoning means that there's basically no bylaws, so you could have 1,000 tiny homes there. You could have 50 families living there. You can build whatever. You can build a skyscraper, a roller coaster. You can run a business with no license. They legally can't even give you a license. You're just allowed to operate whatever type of business you want. So it's kind of like the best, most like free for all zoning that you can find. So we really love that because we don't like having to go through all of the red tape that is still kind of around some of this stuff. So how you can find that is you can go to the county website or the regional district website, whatever the governing body is in your area or the area you're interested in, and you can go to their website and you can find a zoning map. So the map should be on the header of their website or the footer. And if you can't find it, then email them and they should be able to hook you up with that. So you go in there and there's actually zoning. All the zones should be listed that are available in that area. And then you can click no zoning and it'll actually highlight that zoning in that area. But it doesn't exist everywhere. So you may have to go from county to county in order to find where that might be. But also if there's other types of desirable zoning for you, you can use that same method. RDKB, I can show you exactly what that looks like right now for those of you who might be interested. So here's our regional district. So I will try to find the mapping system. So launch this mapping system. If it wants to load. So this is a legal thing. Like every government like every local government, regional district or county needs to have this. If they don't have it, then they'll have it in some other format, which might be, here's a layers list. Here, so layers list, you go to zoning, let's go in here. So, there's no zoning right here and you can just click that on. That should, there. So now you can see all the different types of zones highlighted. The no zoning areas are gray. So you can see little blocks of them down in here. You can see electoral area E is like one massive amount of no zoning. You can see more little gray blocks over here. So now now you can basically move forward and say, okay, these are the areas that I can look in. And then you can start looking on real estate listing websites in order to find land in those areas. So yeah, that was just a quick little side route on that, but let's get into the actual funding side of it. So like I said, we had no money to start. I'm going to go over 3 ways to raise funds creatively. The first one is finding what I call a mortgage partner. It's technically an investor, but I call it a mortgage partner because it's just a little bit more specific as to what type of investor that might be. When I say investor, I don't like think of like some crazy boardroom presentation or anything. It's really just somebody who's helping you out, and it's just a good partnership, I suppose. The second is owner financing. I think that's a really underrated way to go, where you go through there's no banks involved. Often you can get in with a very, very small or like little to no down payment. And there's a couple different ways of finding real estate like that, which we'll go over. And then the last one would be something similar to a subdivision or community project, because I know there's a lot of people that I've spoken to that are interested in making this more accessible for a lot more people and doing it on more of a communal scale, where you could take 100 acres and create a tiny home community out of it. So we're going to go over all of that. So first off, for the mortgage partner and investor side of things, actually one sec here. Yeah, Renee, is it not unusual to find no zoning, and what other zoning works? It is unusual to find no zoning. Another name for it would be unrestricted zoning, which different states have different names. So is it unusual to find it? Yeah, like the way I see it is I usually tell people is if you want no zoning, you might have to be prepared to move states. It's not like you can find it next door. It's something that you look for and then you move towards that area. It's not like, oh, I want to be in this neighborhood. You don't have the kind of pick of the litter in that way if you're looking for that particular zoning. As far as other zoning that might work, it really depends a lot on the bylaws in each area. There are areas that I've seen. We have almost 6,000 clients in 21 plus countries. So I've seen a lot of people in a lot of different areas try to do this. And I see a lot of differences where, in some areas, they might count it as a mobile structure so that you can use it on a lot of different zoning, but then a lot of other areas might classify it as something entirely different. So this tiny home specifically, I feel like that's just a tough question to answer. I don't have an exact answer for it, to be honest. It's kind of something you have to work through on your own in your specific area that you're looking for, and look at the bylaws. If someone wants to use their land for several tiny homes, what zone is usually required for doing both portable and foundation? You may have partially answered. So for the foundation, it depends on the amount of tiny homes for sure. So if you're doing a foundation, it's a lot easier. You can get almost any land zoning if you're just doing one or two or three tiny homes. If you're doing more than that, it's probably going to be a lot. You're going to have to find a more specific type of zoning. So, I'm going to say most types of land zoning are going to probably allow you to have two or three dwellings on it. Other than that, you're probably going to be looking at some kind of special use case. So one that I am aware of is using agricultural land. And a lot of people think that that's one of the more restrictive types of land zoning, which it can be, but it also has a couple of different things that you can apply through, such as the agritourism bylaw, to build additional structures. So you can build additional structures. That's how people are able to build two houses, a shop, a barn, etc. And then they'll also go build a farm to table restaurant, a marketplace at the front of their lot or whatever. So they're able to get away with these additional dwellings because they're using it for like agritourism. So it depends on what you were trying to do, and if you were on that zoning. I know people who, for example, applied through the agritourism bylaw to build this big structure that they were going to use as a market, but then they use it for like running retreats, and they just like have a yoga studio in it. So you use it to get the permits to build it, and then they use it for whatever they want after. So I've seen that done before. The other side of agricultural zoning is that you need staff to be able to even run your property. So I've seen people who have done it where they've come in and they've built additional housing and said, look, we need help on the farm. They built additional housing. They got the permits through that to build that housing. And then after that, they use it for whatever they want. So yeah, that's just a couple things, but I want to focus on raising capital and buying land before we get super deep into land zoning. So there's something called the BRRRR method of real estate investing, and that means this is used in the city commonly, and we've applied that to rural land, and it works a lot better with rural land, and I'll tell you why. So the BRRRR method is buy, renovate, rent out, and refinance. So people often use that in the suburbs where they'll buy a house on a quarter acre lot, and they will throw a coat of paint on it, do the renovations, and then they will rent that out. For when they do the renovations, the rent raises a little bit, and then their equity raises a little bit, and then they'll rent that out for like a decade. And then when the market has gone up and the value of the land has gone up, and they've paid a little bit of the mortgage down, now they have a bunch of equity in it. So they refinance, they pull that equity out, and then they use that to go buy their next rental property, and they do it again and again and again. This is a very, very common real estate investment structure. I have friends that have done it. There's people out there that have bought 200 homes using this strategy in like a year. It's very common, and the partnership aspect of that works like this. There's one person that comes in and they take 50% ownership. and they put all the money down to buy the house. They put well, they don't buy it outright, they get a mortgage. So they put the down payment down to get the mortgage. And they also can put the money down to renovate the house, and they co-sign for the mortgage. So basically they buy it, or they get the mortgage on it. And then person number two comes in and they manage it. So that's the person who manages the renovation, make sure it's going to be done. And that's the person who finds the renter to rent it and manages that tenant being in it. And they get 50% for managing it. And neither can kind of do it without the other. The one that has the money, they don't give a shit to actually go out and do the renovation and manage it. They just need to put their money somewhere so that it's going up with inflation, so they're not losing it by just leaving it sitting in their bank. They need somewhere to put it, so it's a win-win. So basically the cool thing is with rural land is that you have way higher income potential and way higher equity potential. And I'll give you two examples of that. So with rural land, I know people who actually go buy barren land and then they drill a well on it. They pay $20,000 to drill a well. And from drilling that well, the property value goes up 100 grand. So that's a 5x return on the 20 grand they put in to drill the well. And then they sell it. And they just flip rural land like that by going and drilling wells. And you would never really see a 5x return on something in the city, such as a house on a quarter-acre lot, like the Burrs method. So the reason is, in my mind, I put it this way. If you are taking a house, you already have, even if it's kind of a dump and you're just like, putting a coat of paint on it and doing some aesthetic improvements, it already has water, it already has power, it already has shelter, it has the human necessities already. So even if it's a dump, it's already an 8 out of 10 because those human necessities are there. That value is there for people. You're just putting a coat of paint on it, making it prettier. That's a want. That's not a need. So therefore, you're taking it from 8 points of value to a 10. But you're already walking into it at an 8. So you can only really take it so much. You can only really take it up so much value. However, if you go on rural land that doesn't have anything on it, well, that has nothing there. There's no needs are met with that. So you're starting at a 0. So by putting in power, water, and infrastructure and like a shelter, then you're taking it from 0 to 8. So you're creating 8 points of value, not just 2. So that is why you see a way higher return on equity, return on the money that you've invested into rural land, and why the equity increases so much more with a barren piece of property. So that's the equity side. We started, to give you an example of ours, our property value is, we bought the land for $215,000, and now after 3 years of work in the property, investing in it, generating some income off it with our rentals and whatnot, reinvesting some of that income and so on and so forth. We have solar, we have some glamping tents that we rent out, we have a common area where they can, those glampers and our team can come and make dinner and things like that if they want. And then we've got water lines and power, and we're getting our tiny homes in. Tiny homes are not included in this evaluation. It's just the land and the other infrastructure. Our tiny homes are on wheels, so if we were to sell the land, we would tow them away probably. So, but basically just the land and what's on it, it would, without tiny homes, would be worth around $1 million. So we started at around 215,000 what we bought it for. It's now worth around $1 million. You would probably never see a 5x return like that, a 5x land increase on a property in the city. It just doesn't work. So that's the equity side of why this works a lot better, why investing in rural land works a lot better. Now, the other side of it is the income side. So if you buy a regular house as a property investment, you only have one house to rent out. You can't build any more houses because you're on a quarter-acre lot. You've got nothing else that you can really do. It's hard to maximize that because you're limited by space. Maybe you have an extra suite, so you have 2 rentals. Well, we go out here and we have 5 glamping tents. They're just tents. They're non-permanent structures, so there's no permits needed. We rent them out. On our 7th month in, we went from nothing to 7 months later, we're making $30,000 a month on the property from renting out those tents on Airbnb, for retreat hosts that wanted to come host retreats, for events of other types and whatnot. So it's you could do rentals, short-term, long-term. You could do storage. You could do dozens of different types of farming. There's endless things that you could do on rural land because you have the space to do it. Whereas you can't really do that in the city. So you have way higher income potential. It also tends to be cheaper in a lot of areas to buy rural land than it does to buy land in the city. So it just makes it a way smarter and better investment than the BRRRR method is traditionally used for. So people are already doing that investment method in the city. We're just taking that and applying it to rural land. So I'm answering the question, why would somebody help me buy land? They would help you buy land because they're already doing it. People are already doing that, but now you're giving them a much better investment opportunity. And we normally go into it, and instead of doing 50-50, which you could totally do, I would probably try to shoot for 30-70. So we have people doing those types of deals all the time, where they would basically, you're giving them 30% ownership in the land for putting the down payment down and co-signing for you. You're taking 70% ownership for being the one to manage it and to build on it and to maybe have some rentals on it or things like that. We also keep buyback rights. So if we're now 3 years into our project and we are buying out our investor, we are on a payment plan to buy them out, which is super sweet because then we can come back to 100% ownership later. So you could actually effectively look at it like a long-term loan, which is pretty sweet. So that's the mortgage partner and investor side. I only have an hour here, so there's only so deep I can go with it. The next one I want to talk about is, let me just see if there's any deep questions on that. What do you need to subdivide? We'll talk about a subdivision process later. How do you finance that? So I guess answering the question, like, how do you find people to come in and do that? If depending on what type of project you're working on, we have people going for like $2 million in funding, and then we also have people going for like $200,000 in funding for to help for somebody to come and co-sign on a property for them to buy land. So it really depends. I personally like starting smaller. We have a strategy of minimum viable products. So start with something small, get it under your belt, get that experience under your belt, and then you can always build on top of it from there. And after you do your first project, even if it's smaller than your big dream, at least you have that credibility, you have that experience, all of that stuff to be able to show, to be able to move on to something a lot larger. So I would start with something smaller personally. And if you're starting with something small, such as, maybe you need a co-signer and 200 grand, that's actually not that difficult to come by. For a lot of people like ourselves 3 years ago, we didn't have that money, so it seemed like a lot of money, but it's actually not a lot of money for a lot of people. You could actually door knock in order to find somebody to help you out with that. Like, you could literally go door to door and knock on people's doors. And the reason I say that is because a lot of people who own a home would be able to just refinance their primary residence to be able to help you out with that cash and use their equity, leverage their equity to go co-sign it on it for you. And real estate is traditionally, so as far as finding that person, we have a lot of methods, but we don't have time in this call to be able to go through exactly how I would go find those people. But that's just an example. That's just to show you how easy it can be and how many people out there are available for you if you're going for a more of a minimum viable product type project like that. People also see land investment as a super safe investment. It's not like you're investing in a business. Like, you're going to go invest in someone's bakery and all of a sudden they don't sell any donuts and then you lose all your money in equipment that is now completely devalued. That's not really how it works. With real estate, people see it as much more secure. And you can basically tell them, like, hey, look, if this doesn't work, we're just going to sell the land. We're going to pay you back. And if the real estate market drops out, we'll just either rent it out and make some cash off of it, just rent out some glamping tents or rent out a tiny home or whatever, make some money off it. Or we'll just wait 10 years and then or 5 years or 3 years or like whenever until the market comes back, and then we'll sell it then. So it's something that it's an asset that holds value really well. So people are a lot less fearful of doing it. But let's move on to the next one. So owner financing. Owner financing, I think, is a really underrated way to go acquire land. So we have somebody. I'm going to go over a couple ways of finding this. So we have someone on our road. Her name's Elizabeth. She's, I think, 80 years old. Her and her husband built big log cabins. They're massive. They're some of the biggest log cabins I've ever seen. And I pulled in there last year, and she had a sander, like a little sander like this big, that she's using to sand her log homes because she has to sand them and then restain them, and they're massive, and she's 80 years old. I'm like, this is insane. These are like 3-story log buildings, and she's trying to take this job on by herself. This is crazy. So what I'm getting at is there's a ton of maintenance there. And she's just up there by herself, and she was basically looking for somebody who would come and just take the property from her because she needed that much help with just maintaining it. So there's a lot of people who bought acreage way back in the day for pennies on the dollar, and now they're sitting there and their kids don't want it because they want to live in the city, and they just see it like it's a big, thing to maintain. They want nothing to do with it. So there's old folks living out there, and they need the help, and they could also use the money. So if you walked, what happened with Elizabeth is somebody came to her and said, okay, hey, Elizabeth, how about this? How about you stay in your log home? You get to live there for the rest of your life. And you have 100 acres, you get 10 acres and your log home. I'll take the other 90. I will owner finance. You will owner finance it to me. I will pay you $3,000 a month to buy it off you over time. No banks involved. You could probably negotiate a very low or sometimes no down payment at all, or very minimal down payment. And then you'll cover the maintenance. So you'll maintain the property. So now she doesn't have to maintain it, and she's getting $3,000 a month, and it's going to somebody other than BlackRock, who's just going to, buy it all up and do nothing with it, or turn it into some kind of messed up GMO farm. So people want to see their land that they've worked so hard on go to a good person who's going to do good stuff with it. So that's an example of owner financing, and why then there's a whole segment of people that are kind of aging out of their land that own it outright and don't have a mortgage on it that you'd be able to go and do this with. So that's an example of door knocking, of somebody who literally was just in the community, and they were just networked around and found Elizabeth, and they made this deal. So, but there's a lot easier ways. So that's one. You could literally just go door knock and ask and talk to people about that. But you could also use a software like PropStream. So PropStream is a software where you can go and it has all this crazy data with it. So you can go and see when someone bought a property, what their name is, what they bought it for, what they put down for like the down payment, and if they have a mortgage or how much they owe on a mortgage, what the valuation of the property is now, et cetera, et cetera, et cetera, their mailing address. So what you can do is you can go in and you can find people, you can target people in the area you want. You can target people who have no mortgage at all. You can target the size of land, the acreage or whatever that you're looking for. I don't know if you can target the land zoning specifically, but you might be able to. And then you can find like 1,000 people, and what people use PropStream for, what they do then is they mail them. So they send everybody a piece of mail, and you write out a very nice, very authentically written letter that says, hey, this is my story. This is why I really want some land. This is what I'd like to do with it. Would you be willing to talk to me about a potential owner financing deal? And then you send that out to 1,000 people. And I say 1,000 people because you need high volume for this type of stuff. For example, if you're going to go try and do this and you're going to knock on one door and someone says no, and you're like, oh my God, I tried, and everybody's saying no, that's not enough. You need to hike up the volume massively and not get discouraged the first time somebody says no. That's why I say 1,000, because you'll see statistical significance when people are actually when you do a high number. The name of the website is PropStream. I don't know if you can pipe into this, Tom. Tom's on my team. He's sitting in the audience right now. Tom, if you can link that to folks, that would be cool. So there's other softwares such as PropStream. That's just one example that comes to mind, but you could Google PropStream alternatives and you'd probably get a full list, and you can compare prices and features and stuff if you want. I just know PropStream is one of the main ones that folks use. So yeah, you can use PropStream and do that. You send out these letters, you'd probably get like a 10% callback rate of people that would be willing to get on the phone with you. And industry average, I'd say, is probably around 2% of people would be like an actual yes. So if you send it out to 1,000 people, you probably get 20 people that would come back and say, hey, I'm willing to do this with you. And then you can go start to check out land and see where you might want to go and see who you align with the most and that kind of stuff. So that's an example of owner financing. Now, if you're in the US, there's a website that already has done it for you. So instead of you going out and having to find that land, there's basically someone who decided that they're just going to go out and do it, and they're going to buy all the land themselves, and then they're just going to owner finance it back to you and make it even easier on you. And that website is called discountlots.com. I don't know if anybody's heard of that before, but they have lots that are anywhere from like a quarter acre right up to like 40 acres. I've seen even more than 40 acres, depending on how much you want. They have land in a lot of different states around the states. They have 20, I think they have between an average of 20, maybe more new lots hit their website every single week. So you could also just check up and just continue to check on what they have in stock there. And discount lots, you can go in and you can buy land for $1 down and low monthly payment. So it's $1 down, no banks, no fees, no agents, no like anything like that, no credit checks, nothing. You put $1 down, and then you basically rent to own or owner finance this land. So you could be paying anywhere from usually it's anywhere from $200 or $300 a month up to $900 a month, depending on the size of land and how much it's worth and stuff like that. They do have land on there that's no zoning as well, so you can look that up too. They got, I find nice lots on there in Texas and Colorado and California and stuff all the time. But yeah, you go, that's another thing to go check it out. So basically, they've just taken the work out of owner financing for you and put them all in one spot for you to check out. Now, if you do it yourself, you just have more options to go and find stuff in other areas, because discount lots kind of focuses on really low priced land. So because they're buying in quantities, they can't afford to go buy, $500,000 parcels. Most of their parcels are only worth, I don't know, probably $80,000 or less kind of deal. So yeah, you if you want easy, check that out if you're in the States. If you want more variety, then you might have to go look in yourself. And PropStream might be a good place to start. So now we can get into kind of the community. Well, let me see what. I presume some of these pathways require an LLC or some kind of liability. So some kind of how we set ours up. That's a really good question, actually. So how do we set up this from a like corporate liability kind of perspective? So there's a couple different things that you can do. We personally, our legal structure is we have a holdings company that owns the land. We, out of all these structures so far, we've talked about owner finance, we've talked about doing the mortgage partner. We took a mortgage partner. So that's what we did to get our land. We didn't owner finance it. So with the mortgage partner, we knew that we were going to have multiple owners on a piece of property, and some people here might be in that scenario too. So with multiple owners, for one, you might want to, let's say you take someone on as a mortgage partner and then you want to buy them out in 3 years. Well, if you buy them out, then you have to go through the mortgage process again entirely. And we work for ourselves because now we're just homesteaders. We just live on the land. We don't, so it's pretty hard for us to go get another mortgage. And we knew that was coming. So instead of doing that, what we did is we got them to co-sign on behalf of a holdings company. So we have a holdings company that owns title to the land, and we all just own a portion of the holdings company as equity, as shares. We're shareholders in the holdings company. A holdings company is the same as an LLC in the US or a corporation in Canada. It's just referred to as a holdings company because all it does is hold an asset. It does not make any money. It doesn't have money flowing through it per se. It just is there to hold the asset and own it. That's it. So we did that because we were able to kind of sneak by that mortgage process where, we had somebody come and co-sign and put the down payment down. We put the ownership in a holdings company, and then we all just took ownership of the holdings company. And that way you can divvy it up as fast as you want and as much as you want. If you want 10 people to own the land, then you can have 10 people come in and be shareholders and you each own 10%. Or maybe, in our case, we keep 70% and then our mortgage partner comes in and they take 30%. Or maybe they want more. Maybe they want to put in a bit more money to help you build infrastructure. Well, then you can easily say, okay, here, yeah, sure, give us the money. We'll give you another 20% ownership for the money you're helping us out with. Maybe you want to take on another investor in the future. Maybe you want to buy them out. Anytime you make any changes, it's very easy. You can just go to your lawyer or even do it yourself and just change shares around. You can do it like our lawyer does it in like a day for us, and it costs like $300. But if you do that and make those changes when you're on title personally, then you're going to have to go through the mortgage process all over again every time you make any kind of change. And we knew that would be really hard for us, so we didn't want to do that. So yeah, those are a couple different options. So that's the positive side of a holdings company is you can move ownership around really easily. Now the downside of a holdings company is that you have to get a commercial mortgage, which means a higher interest rate. Whereas if you put it in if you put your name on your personal name on title, then you get the con is that you can't move it around as easy. The pro is that you get a lower interest rate. I should also say, if you're interested in buying land, like I have a lot of people that are interested in buying land with friends, there'll be like a bunch of them going in together. Banks and lenders usually don't like more than 4 people being on title together. Even 4 people is kind of topping it off a little bit. I've had a lot of lenders kind of come back and be like, I don't know. Like any more than 3 people on title, it's kind of weird. So it just depends. But then again, I've seen people get away with it. So just, we use a mortgage broker. We always use a mortgage broker. They don't cost you any money and they'll find you the best deal if they're good. So we've been happy doing that. I know, I guess other things to say, I'll get back to the legal structure in a minute, but I just want to say too that with rural land like this, with barren land, you're looking at a 30 to 50% down payment compared to land in the city where you can often do like a 15% down payment. So yes, the down payment is higher, but because the cost of it is usually lower or can be lower, depending on where you're looking, I've found that it ends up being the same. It's the same monetary amount for a down payment. So if you have to do 15, let's say you're buying a $800,000 property and you have to do 15% down in the city, that's 120K. But then let's say you go and find a $300,000 property that's out in the bush and it's a rural piece of land. Well, you have to put 30% down. Well, it's still 120K. So it's I don't know, it's kind of one half dozen to the other. Yeah, what else? So yeah, so that's our legal structure is that's how we decided to do our legal structure with the land. And then any business that you run off it, we specialize and help people cash flow properties so that they're able, like we're trying to help people be self-sufficient, and people think about energy self-sufficiency, water, they think about growing food, but then they forget about being financially self-sufficient. So as modern homesteaders, we need to figure out a way to also be financially self-sufficient. That's what we help a lot of folks with. I mean, we help with the other 3 too, but that's kind of the one that people forget. So if you're looking to make some money off the land just to pay for things and live a good life and retire early and whatever it is, well, with that, we actually open up a separate business, and that business is what the money runs through on the property. So you go through holdings company, and then we have our actual business where we put the money from renting out glamping stuff and hosting retreats and workshops and growing food and like all of that kind of stuff. So that is what we do for like our legal structure. What was the name of the site? What was the name of the site where you can get crowdfunding? We haven't talked about crowdfunding, but I can in a little bit. Deeper discussion. How can we discuss this with you? We'll talk about that at the end. Let's see what's in the chat. Sweet. Okay, I'll keep moving forward, and we'll hopefully have some time at the end here to go over some of this other stuff. All right. Now I want to get into larger developments. We've had a lot of people that are interested in building like tiny home communities to make this type of living more accessible to a lot more people. So a couple things here. So first off, we have clients that are doing this and have found loopholes in campgrounds where they go in and they buy a campground and then they turn it into a tiny home development, like a tiny home community. And how they do that is basically because tiny homes are on wheels and you can move them legally. If you move the tiny home out once per year, where it just moves out and you can move it right back in literally like 2 minutes later, it counts as a temporary dwelling. So then you can basically just have people live there forever. So we've had a lot of people do that. So when we're talking about zoning for multiple tiny homes, that's the potential, is to buy something that already has campground zoning or that has the ability to be rezoned as a campground, or have a portion of it rezoned as a campground. A lot of rural land zoning will have options for you. A lot of rural land zoning will actually have like a minimum amount where it's not like you can't open up a 50 campsite, a 50 site campsite, but you could have like 3 campers or 5 campers on your site. That's like kind of that's pretty common. I see that a fair bit. So those 5 campsites, you could go in and you could get them approved, and then you can park 5 tiny homes on them or whatever, right? So that's an option there. Then I want to go over a couple plans. This is some bigger, like more high level stuff, but this is a really cool model because so far we've talked about acquiring land, and a lot of that is easier with barren land. But that just because you get the land doesn't mean you have the money to build on it. So we generated cash flow on our property, and then we've used that to reinvest a lot of it. We've also taken additional investment. We don't have time to talk about that today, but one that I think is super cool, that we have some clients doing and that we plan on doing in the future for new locations that will be opening, is to basically sell tiny homes on your property. I've seen people use this for building full-fledged communities, and I've also seen people use this. We have clients using this right now for that, and also for building retreat centers and building rental income as vacation rentals, for like tiny home vacation rentals. So I'll go over our 2 clients that are working with these models. So client number 1, his name is Jonathan. He went down to Costa Rica and he owner financed 5 acres. Then what he did is he went and he started building little tiny homes for people. And it cost about 150,000 to build the tiny home, and he sold them for 300 grand. So people would come and pay $300,000. They would get their tiny home, and they could come and live in a part of his community. And then he did this like 20 times. So he made $3 million in, well, 6 million total, but 3 million was profit that he could then use to invest in the infrastructure for the like the rest of the infrastructure for the property, and was able, they have a pool house, they have gardens and greenhouses, they bought 50 acres next door to expand and kept building. They've got they're doing all sorts of cool stuff. So that's one way that you can use to sort of, it's kind of like crowdfunding. Instead of getting one person that's going to come in and give you $1 million, just go build 10 tiny homes that cost you 100 grand, or not even build them, but buy them from someone that comes and installs them and puts them on site, and they cost 100 grand, and sell them for 200. And the difference is that people don't have the money to go buy the land. You already have the land. So being able to supply that, and they have a tiny house on it, you're already ahead of the game. That's why people would do that. And then also for the infrastructure, because the rest of that money is just going into the infrastructure that everybody gets to share. So you're putting in all the water lines, you're putting in the power, maybe you put in a big nice common area that everybody can use. Maybe you put in a nice hydrotherapy spa and sauna and stuff, and a natural swimming pond or something that everybody gets to use. So I think that option is really cool. Jonathan's using it for an intentional living community. And we have a client that's working with this model. His name's FJ. He bought 44 acres in Pennsylvania. And he wants to do a similar model, but he wants to do it with tiny homes on wheels. And this is really interesting. So he wants to do, let's say you do 10 tiny homes. They cost you 100 grand each, and you sell them for 200K. And what they get is this person owns the tiny home. and they get rights to the land underneath it. And his is a vacation rental strategy. So these people are buying these as vacation rental investments. So they can come use them for whatever term you set. Maybe they can use them for 2 weeks out of the year. Maybe they can use them for 3 months out of the year, whatever you want. And when they're not there, they get rented out and you split the rental income. So now you have the money coming in to pay for your infrastructure from selling all these lots off. Well, you're not actually selling any land. You're selling the tiny home and the rights to the land that it's on, just so they can come and use it. So you're getting the money to build the infrastructure, but you're also getting income generators for yourself on the property, which you can actually hire a caretaker to manage and stuff. And now you're actually kind of semi-automating your income a little bit. So I think that's really cool. And the cool part about that with FJ specifically is because they're on wheels, one of your exit clauses can be if someone has a disagreement and they don't like it or whatever happens in your parting ways, they can come and just tow their tiny home away and you can just part ways and it's super simple. Instead of having somebody that has a physical building that can't be moved, having something on wheels actually is kind of cool for that reason. So yeah, I think that's really cool. We've seen people raise a ton of money to be able to build out the infrastructure for the project using that. Now I want to go one step further, and what I just talked about was not a real subdivision. It is just contract. So somebody owns the rights through a signed contract to a zone that on your property that you just drew on a map. It's not actually a subdivision. They do not own the land. They do not own title to the land. It's literally just a contract that says, hey, you get to use this area where your tiny home is parked or where it's going to be built. That's it. So I call that kind of like a contractual ownership. It's not really any ownership at all. It's just a contract that you're allowed to use it. So the next one is actually subdividing. So this is something that Shelby and I, my brother, my partner, my business partner, that we want to do next. And we've seen people in our area do it. So they'll take 160 acres, the quarter sectional land, and they will subdivide it into 50 family lots. So that would be, people get an average of 3 acres. So, and you could do it, you could divvy it up, and some people get 2 acres, some people get 5, whatever. Some people get 10, who knows, you have different sizes. So, this is a really, really, really interesting model, and people did that. They subdivided it, and then it takes, everywhere is different. Here where we live in British Columbia, Canada, it takes 2 to 4 years for a subdivision process to go through, and it doesn't always apply to every type of land zoning. Sometimes you apply and they say no, you cannot subdivide this. However, because we know how to find no zoning, you can subdivide no zoning. So we kind of have that in our back pocket. Like that's a little secret card that we're playing. So we know how to find the no zoning. Therefore, we know where we can subdivide. And yes, it takes a long time here, but I'll tell you why it's worth it in a minute. However, there are other places. We have a client, his name's Cole. He's 22 years old. He went to Texas. He bought land. He subdivided it into 14 lots. He sold it all within like a couple months. And the subdivision process took 2 weeks. 2 weeks it took to subdivide it. It was extremely easy. He actually came in and he let people pick out what they wanted subdivided. They came in and they're like, yeah, I want this parcel. And then he went and he subdivided that lot off and he sold it. Then the next person came and they're like, I want this area. And they're like, he went into the county, subdivided the lot and sold it. He did it in 2 weeks. That's insane to me. So there's different areas that you're able to do this way more effectively than other areas. But for us, it's going to take 2 to 4 years. We still want to do it here because the value here is the easiest thing, in my opinion, to raise money for, to get capital for, because the upside is so high. So the people who did it here, all those lots, those 50 lots that they subdivided, they sold within 3 months. They were gone. They were eaten up. One person bought 20 of them and then resold them for way more money. So there's a huge potential here because not everybody wants 160 acres. Not everybody can afford 160 acres, but a lot of people can afford 3 acres or 5 acres. So here's our plan. We're going to go buy 160 acres. We're going to subdivide it into 30 to 50 family homes, or family lots, I should say. And we are going to build the road networks. We're going to drill the wells, and we're going to provide people with a permaculture plan so that they and education and training so that they know how to plant a garden and grow their own food, raise animals. And we're going to provide them with a business plan on how to cash flow their property so they can quit their day job and just work from home and make good money, and how to systemize that so it's semi-automated. So, and we're going to provide them with the folks that we know how to be able to finance tiny homes, to be able to bring lots and build their own shelter and have their own shelter on site, and have a tiny home there. So we'll be basically building tiny home communities, and we'll be putting the accountability on everybody else. So we don't have to build every single thing. We're just selling the lot and preparing it for them, and they come in and actually build it, and they have the accountability to do so. And how the numbers work out on that, it would cost us $1 million to buy the land. It would cost us $2 million to do the road infrastructure, do the subdivision process, drill the wells, get the plans in place for it. And after they were all sold, the revenue would be around $9 million. So that's $6 million in profit for that. And even if you had a big mess up, even if you made $1 million in mistakes or $2 million in mistakes, there's still $4 or $5 million in profit there. And that's why this is the easiest thing, in my opinion, to go and get money for. Yes, it's a big project. Yes, it's out of a lot of people's scopes, but I'm just saying it's there. There's huge potential in it. We hope to be able to do that all over North America. And by the way, we're not just trying to profit off of this. That would be somebody, basically we'd be giving somebody land, and they'd own land 3 to 5 acres. They'd have water security. They'd have the accountability and all the plans and training to be food secure, to be power secure, to have their own shelter. They'd have all of that for half the price that it costs to buy an apartment in a nearby city, for half the price of an apartment, and you actually own the land and get everything with it. So that is a pretty cool thing that I'd like to throw that idea out there, because we've had some people scoop that up and do some cool things with it. So yeah. Let's go. So I have about 18 trailer lots. That would be perfect. Yeah, potentially with trailer lots, you could probably you could turn that into a tiny home community for sure. Glad you're doing land ownership models and not just rentals. I know folks doing the same model for subdivision for tiny homes on the East Coast. Beautiful. Yeah, I love hearing it. It needs more of it. I know a lot of people that want to do like the intentional living side of things, and I think that's great. However, I don't know if Western society culturally is ready for that. I think people still want to feel like they own something and feel accountable for that thing. So that's why I still think that the actual land ownership and people being able to build equity and stuff is something that that I'm a big fan of. Renee, if I move the trailers and put tiny homes on my lots with infrastructure, should I build or put tiny homes in, or let customers do their own? That's totally up to you. I think if it were like right now on our property, I just don't have the money. We don't have the money to put tiny homes in for every single person. So we just have, like, even our staff and stuff, they come up and they just bring their own tiny homes. Everybody brings their own house. So you could totally do that, and you don't make a ton of money. People pay what, like $500 a month, $700 a month or something with hookups to come and park there. So 18 lots, you're not making a ton of money, but like if you play your cards right, that might be enough to retire still. Like that's still, and maybe close to 10K a month kind of deal. So yeah, I don't know, it's up to you. And up to your finances, I guess, if you have the money to actually build them or not. Also, time, you probably don't have. If you have the time to build tiny homes over and over and over again, we just had ours built by a contractor. It took 9 months. So if you have 18 tiny homes to build, it might take years, right? We're looking to do an RV resort and tiny home village and tiny home hotel on acreage between 30 and 300 acres in western San Bernardino County. We will have lots to sell besides the lease, daily rental. Sweet. That sounds good. Cool. All right. Let's see if there's more. I had a question about crowdfunding. So I didn't really talk about crowdfunding. We did use crowdfunding to raise capital to help build some infrastructure. We raised about $60,000 with crowdfunding, and the rewards we were giving for that were glamping stays. Like you could come up and you can stay on our property in like a glamping tent and like other Airbnb stays. So I've done 3 crowdfunding campaigns successfully. The crowdfunding campaigns that I've done have been on Kickstarter and Indiegogo. People do not get equity. They back your campaigns in exchange for a reward, and you choose the rewards that they get to choose from that they get. So that's one type of crowdfunding. The other type of crowdfunding is you can crowdfund for equity. I've never done it. I've had friends that have done it. I don't know any websites per se that are good for that. Now, something to consider is that when you're crowdfunding, it is not as simple as just throwing your project up on a website and then you're just getting funded and getting traffic. That's not how it works. They're just a platform. You still need to drive all the traffic. So out of $60,000 that we raised, probably only $10,000 of it came from their platform organically. The rest of it was all our marketing efforts to drive traffic to that website to make people aware of the offer so that they could buy it. Yeah, that's that pretty much. Also, if you're interested in crowdfunding, I don't crowdfund for the money anymore. I crowdfund for the connections. Every time I've crowdfunded 3 times successfully, I've not only had investors approach me, I've actually secured an investor and signed a deal every time, which is pretty incredible because instead of you feeling like you have to go find a needle in a haystack for someone to partner with, running a crowdfunding campaign like that can be really epic for becoming a magnet and attracting those people to you who are like-minded and believe in your vision. So that's one way that after, but you kind of need the land. You need the land secured, and then you can do crowdfunding. That's crowdfunding is a beast of its own. What do you look for tent site builders? Any suggestions? Tent site builders, I don't know. Depends on your area, depends on what you're looking for. If you're just looking for the tent itself, or if you're looking for somebody to actually come build the site and set it up, that would be location dependent. Sweet. All right. I think we're at time already. So I hope that was useful for folks here. Let me know if it was. Let me know if you have any questions. If we help folks do this, we've had I think almost over 6,000 clients in 21 plus countries, and we'd love to help you out. That's what we're here for. We never really expected to be doing this, but here we are. So there's a link here. Tom threw it in there. If we have a playbook that you can go check out if you want. If you check out our websites and check us out on social media, lots of free videos and whatnot, little free tips and stuff if you want to get started. We do offer a full course. Our full program is $397, and you get our free business plan package with it. So it's pre-filled out with all our financial projections, our pitch deck, everything we use to raise funds to go and buy land and do all of this, pre-filled out exactly the way that we used it. And we try to be very thorough. We also have a VIP group that you can get into for as low as $67 a month, where you can get 2 calls with me every month, and I will help you vet all of your plans and ideas and even properties. And you'll be in there with a like-minded group of people and hear about all these other crazy cool projects that other people like yourselves are doing. So thank you. Zach, I'll let you take it from here.